What exactly is going on right now in the real estate market? Well, today we're going to dive into Orlando's most recent market report starting 1, 2, 3 now. So inventory is up 5.8% month over month. We are roughly stalemate year over year. It's going to be interesting to watch inventory numbers from this point forward, because this point last year, inventory really started to creep up into the 6,000s going on for Q3, Q4. We haven't been doing that well this year, and so that has resulted in prices continuously climbing, which is going to be a byproduct of what we see today as well. And it's the same reason, like I've always been saying with these market recaps, is simply there is no incentive for someone who owns a home right now, even though they could sell, to move into another home unless it's a big lifestyle change for them to go pay a lot more money because of where interest rates are and prices as well. And so I've even had this conversation today with a couple people where they're like, I will absolutely sell my home right now. I have tons of equity. I want to move up, or well, some wanted to move down. And they're like, bro, why would I do that? Because I'll be paying like $1,000 more a month on my mortgage. It just doesn't make sense. I want to stay put either till I see a change or I see an opportunity. And if you are somebody like that looking to move into another home, your biggest opportunity right now are looking for inventory homes in the new construction space. I've been showing homes where they're offering 4.99 for 30-year fixed, 5.25, even as low as 3.75 for 30 years, like pandemic level interest rates on the table. So if you really are looking to get into a new home, you don't mind a shorter timeline because they're going to be inventory or move-in ready, that's an option you can take. But overall, I'd like to see the other months within the rest of the year to increase in inventory as did June. I think that'll be very positive for buyers out there, which is amazing, and sellers as well. But going down, we have a flurry of negative numbers. So new contracts are down 13.9% month over month, 12.7% year over year. We're also down on new pendings, or not new pendings, just pendings. We're down 7.9% month over month, 6.3% year over year. And for the first time ever, I have to admit, for doing these recaps for the past 8 months or so, I am, for the first time, wrong. Closed sales came in negative, and I remembered I said it would possibly come in positive. But we're down 17.6% as well year over year on closed sales. I don't know what happened. Finally, or not finally, I shouldn't be celebrating this, but I'm wrong this one time. I'm off by 26 units, 27 for it to be positive. But you go down, guess what our average price is doing? It's still going up, ladies and gentlemen. So we're up month over month and year over year. We're also up on the median price, and we're down 0.5% year over year. We're doing good. We're not doing bad. Now, the market reports from this point forward are going to be very, very interesting, because it was this point last year in June 2022 where prices hit their peak and started to come down ever since, until floating right back up past that point last year. So a lot of people are speculating that July, August, September, October, November, December are going to be catastrophic. When you look at last year, when prices went down roughly to the tune of 5 to 7%, you were looking at interest rates going up a significant amount in the first time in 2 years, one, and two, the available amount of homes for sale went up substantially during that time, all the way up to a little bit over 7,000 units at peak, which is going to the lower end spectrum of what it was pre-pandemic back in 2018, 2019, as I've showed that graph multiple times on these reports. Now, here is the difference between that and this year. This year, we've been in the 6% realm for quite some time, and we've seen price increases too. We haven't seen inventory surge in 2023 like it did in 2022, but I do believe the same thing that has happened for decades in the real estate markets across the United States will happen this year again. There won't be as many buyers in the Q3, Q4. That's holiday time. That's just what you're gonna expect. And so the big question of, do I think prices can or will come down? Do I think it's possible? Of course I think it's possible. I'd be lying, and I think anybody who says no to that question is pretty much straight up lying, because that's what's happened in Orlando over the past several years. You look at 2017, 2018, after June, the prices come down somewhat. What I would argue is that that price difference, which is maybe 2 to 5%, isn't enough when you think of the long-term play of real estate. So if you're trying to time the market at a perfect specific time, sure, maybe you try to wait it out and see if you can be one of the lucky ones. But for most people who are looking to live somewhere they love for a long period of time. It's statistically proven that you will gain equity. Your house will appreciate over time, even if you have some fluctuations from it's kind of like weight, which I need to lose. You hop on a scale every day. Of course, some days you might be weighing more, you might be weighing less, but on average, based on the activities that you're doing, it'll average down or average up. It's the same thing with the real estate market. So can prices come down from month to month? Can they go up from month to month? Yes, but I think over time, real estate has proven to be a resilient asset, and that is why you should not be timing the market, but you should spend time in the market. That was cool but cheesy at the same time. I think this stat sheet that I'm about to show actually is very important for you to see as well, because you might have a different encounter with the real estate market dependent on what price point you are in. And so looking at this graph together, if you look at June and inventory and supply numbers, which supply measured in months, you go down to price points starting at around the average for Orlando, which is going to be in that $350 to $399 range. Got 1.5 months of inventory. That is not a lot at all. And so what you see is a lot of multiple offers on the more affordable price points. That's what's getting suppressed. And especially when you got institutional investors back into the market. There was just an article the other day where you got this Dallas-based firm buying up rental properties all across Central Florida. You don't have a lot of relief for the entry-level price points, but as you see, as you go up into the 5 to 599,000 even, you're at 2.2 months. That's not great either. 1 million to 1.5, there's 2.9 months. You really start getting some nice relief at $2 million to $5 million. And so as you're looking at information online, make sure not to necessarily draw conclusions from, say, what's going on in the luxury price point and take that over to what's going on in homes that are between 300,000 and 700,000, because they're experiencing very different things. I think Orlando is overall doing okay, and nothing is wrong with that. We could see some more inventory, and I'd love for that to happen in Q3, Q4 of this year. I'd love to hear your thoughts. This was fun. Should do it again sometime.